Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to take a look at Disney because Disney yesterday, after the market closed, published their Q4 earnings, and I want to take a deeper look into these numbers and then just tell you what I think about and what's the future for Disney and what I will do with my position in my portfolio. So let's go. So Walt Disney reported adjusted earnings of 32 cents per share in the first quarter of 2020, beating the SEC consensus estimate by 171%, but declining 79.1% year over year. Revenues decreased 22.2% from the year ago quarter to 16.25 billion, but comfortably surpassed the consensus mark by 2.6%. So overall, and this is really surprising, even with all the theaters and parks are closed, Disney was able to earn money and earn 32 cents per share. This is of course surprising and very positive surprise. And the reason for that, of course, is Disney Plus and the big success of Disney Plus, but I will tell you a little bit more about that later. Let's go through the segments. The biggest segment, the media and entertainment distribution, with 77.9% of the revenues, declined 4.8% year over year to 12.66 billion. Parks, experiences, and products revenues, which are 22.1% of the revenues, decreased 52.7% year over year to 3.59 billion. And then the most exciting part of the Disney business right now are the subscribers for their streaming services. And so ESPN Plus had 12.1 million paid subscribers at the end of fiscal first quarter, compared with 6.6 million at the end of the year ago quarter. Disney Plus, the biggest success, as of January 2nd, 2021, had 94.9 million paid subscribers, reflecting strong growth since its launch in November 2019. And also Hulu ended the quarter with 39.4 million paid subscribers, up 30% year over year. And also when we look at the balance sheet, even with this very difficult times for Disney and all the parks and so on, as of January 2nd, 2021, cash and cash equivalents were 17.07 billion compared with 17.91 billion as of October 3rd, 2020. And the total borrowings were 58.28 billion as of January 2nd, 2021, compared with 58.63 billion as of October 3rd, 2020. So even in this very difficult times, there's still a good balance sheet, a very solid balance sheet. And so Disney and the streaming services, Disney Plus, Hulu, and ESPN Plus together combined are now at 146 million subscribers, and so they are in the hunt of Netflix, and sooner or later will catch Netflix with that. And this is of course a really great success, because when Disney Plus started, the outlook, the estimate was that Disney Plus can reach the 60 to 90 million subscriber mark by 2025, but now the estimates just higher, and now Disney expect to reach 230 to 260 million subscribers by 2024, which is amazing, an unbelievable number. This is a big game changer for Disney. It seems like Disney is more than a streaming service right now, than parks and theaters. Disney really made the best out of this pandemic situation and just invented the whole business new. With that, I want to go back to the first video I made about Disney, and was called Why Disney Stock is a Good Buy and a Great Chance for Long-Term Investors. This is from April, and here in one article of Forbes, they just calculated what could happen if Disney really reached the 200 million subscriber mark by 2025, and they come to the conclusion then that, and only that, have the potential of a 30 billion giant. And now with these new numbers, the new estimates, it's even a little bit higher. And of course, this is a big game changer. At this time, it seemed, when I made this video, it seemed like, ooh, this is maybe unrealistic. Now it seems like it's absolutely realistic. And so this is great, and this is a great outlook for Disney in the long run. And as I said, all of that without the income of the Disney parks. The Disney parks are still closed. There are some timelines when the parks in the US or even Hong Kong can open again, but who knows with this pandemic situation and how long it really lasts. And so it's great that Disney is able to earn money even when the parks are closed. The last year, from the peak to the downside, in March to now, Disney gained almost 120%. And that's, of course, really a lot. But after the published numbers from yesterday after market close, today Disney just loses 1% to now $188. I think this is the reason for that is just that the stock already gained so much, and so a lot of these very great numbers was just expected. And the question for me now become what to do with my Disney stocks. I bought my 18 shares at $101.07 on April 14th. So I was very happy at this time to just get them around $100. And when I look back, of course, the only mistake was not to buy a lot more. And so now my position is up 86%. As I said, the question, of course, every time when you sit on a lot of gains is what to do now. Just take the gains or hold, or what can you do? And therefore, for me, it's very, very important to know the value of the business, and therefore, I have to calculate the intrinsic value. And with these new numbers from Disney Plus and the new estimates, of course, also the intrinsic value of Disney changed. And so I calculated it new and come to an intrinsic value around $165 right now, with a price of almost $190 now. It's overvalued, but not that much. It's a little bit overvalued, and that's fine. I will not add at these prices because I don't like to buy overvalued stocks. I like to buy undervalued stocks like I did with Disney in April. But the overvaluation is not high enough to sell now, so I will just sit with this great company. And so Mickey and Minnie and also me are very happy with these numbers and with my investment at all. And so there is no reason to do anything, just let them do their business and everything will work out fine. And of course, even more when the pandemic situation ends, and hopefully soon ends, then they come back to normal business. And then with a normal business and Disney Plus on top, an even stronger business than before, and even before Disney was a giant. And so everything is fine for me and for the whole Disney family. So that's it for today. If you like the video, please give me a big thumbs up. This helps me and my motivation and also the YouTube algorithm a lot. Subscribe to the channel and follow me on my road to financial freedom, and ring the notification bell to never miss another video. Then we will see the next time with another video about another stock. See you then. Take care. Bye bye.